So today I've got a big video for you guys. It's going to be a long one. I've got a lot of stocks to talk about. I'm going to be looking at some opportunities in the market because obviously we've had a monster year. It's been a very good year. But where now are the opportunities in the market? And I'm going to hopefully share that with you guys. And as well as that, some other stocks that I'm going to cover today. So there's a lot to go through. Hope you enjoy it. Smash that like button. Let's get started. As well as that, if you want some free shares from Trading2, join through link in description. Get a free share worth up to £100. That's the broker that I use. But opportunities. Where are these opportunities? Where are the stocks that are crashing? Now, when I first started learning into the stock market, one of the people that I was learning from, they said to me that there's always opportunities in the stock market. Even when stocks look absolutely crazy, expensive valuations, there's always some opportunities somewhere. It's just that sometimes the opportunities are obvious and then sometimes it's a little bit harder to find the opportunities. An example of that is in the last 3 years. There's been a mass range of opportunities out there to make money in the stock market. Obviously, starting off with 2020, the CV year, a clear as day opportunity. You know, indexes dropped 30%. So many stocks lost 40, 50% within a 1 month period. I remember that when we had the CV dip, every day I was going on my account during, like April and March, and my account, the gains that I had through the years previous were just going, disappearing. And I had stocks that were up over 100+% that I was starting to see go red. And I was like, what? Like, I've had that stock for many years and I'm now down on that position. That was crazy. So, obviously the CV dip was a very easy opportunity to buy that dip and make good money from. Obviously the key thing to say about opportunities in the market as well is that what a lot of people will do, and you'll see this often, is that people will say, oh yeah, obviously that was an opportunity when you look back on it. Obviously when you got hindsight, it looks a clear opportunity. Trust me, sometimes them opportunities that you can miss because you can still be fearful about, oh, maybe that doesn't work out. At the CV dip, I remember, buying a couple of stocks, and I remember at the time people were saying, oh, you don't want to be buying, stocks at the moment in March and April time when it was these sort of prices because this CV situation is going to get a lot worse. And obviously if you didn't buy in that CV dip, you missed out some good opportunities. So it's also worth saying that, but that was a bit more of a clear opportunity. We roll into 2021. Obviously, the indexes are a lot higher. Where are the opportunities there? It's a little bit harder to find the opportunities there. Now, this might not appeal to everyone, but clearly when you look at 2021, there was a point where so many stocks got to crazy valuations, and that should have been realised how crazy some of these valuations were. So a clear opportunity that you could have gone in 2021 is going, well, how much of this stock, how much of these gains in share prices have been dragged forward by the CV situation? And if the CV situation was to disappear, what would happen to a lot of these stocks? And you could have gone short on some of these stocks that have made so much demand pull forward, so rich valuations. And if you went short on some of these stocks, obviously not everyone will go short, but you could have made a lot of good money from that point of view. Maybe that was a little bit less of an obvious one in 2021, but as well as that, everyone got greedy on growth stocks in 2021. Do you remember everyone went growth stocks? You saw dividend stocks that just weren't wanted. You saw people that claimed to be dividend investors buying growth stocks. I remember there was a YouTube channel, and I can't remember who it was now, the name, but there was a UK YouTube channel called Dividend Something, and they basically started buying dividend stocks, and by the end of it, they were buying like penny stocks, growth stocks in 2021. It was like, not really much of a dividend investor now. So everyone just piled into growth stocks, and that meant like a lot of dividend stocks were not wanted. An example was Costco. Through 2021, really wasn't. Through 2022, the stock really didn't do much compared to what the market was doing. You could argue it was up 8%, and that's okay, but it was massively underperforming the market. And people threw like Costco out of consideration, and then obviously they went on the rally through the summer of 2021 where most valuations peaked in growth stocks. This stock then went on to rally 56%, and obviously you would have collected dividend as well. So that's just one kind of example there. So 2021 was a little bit hard to see the opportunities, but there was opportunities there whether you wanted to go short, or there was a couple of dividend stocks that people didn't want because everyone just went, I'm just buying growth stocks. Why do I want to get that 3% dividend yield stock when I can go get that growth stock that's up 20% today alone? 2022, a lot more obvious. 2022 was, so many stocks were down, especially the small caps. Small mid caps were, eventually the big tech joined in towards the back end of the year. But for the start of the year as well, small caps were killed, and obviously we had the worst stock market since 2008. It's even got its own Wikipedia page now, and obviously the opportunities were a lot clearer to see. Now 2023, what we've had a really good year. Stocks have been rallying, but there's still opportunities out there in the market. It seems like to me one opportunity in the market that has happened in 2023 has been Fintech. I think Fintech is a sector that you always see these sectors kind of struggle a little bit. And for me, 2023, one sector that I think has struggled and has been one of the opportunities is Fintech platforms. PayPal being one of them. Obviously down 29% year to date while so many stocks have rallied, but I would argue that PayPal, 9 times forward earnings, still growing profit, growing free cash flow, buying back 6 billion shares is a cracking opportunity out there. So I would identify that as an opportunity out there, and that's spread across the whole of the fintechs. Whether you look at Paycom, obviously not as much as a fintech kind of platform, but it's down 45%. Adyen down 26% year to date. If it wasn't for the recent rally, this stock would have been down over 50+% on this stock, another fintech platform. I've got to say, it always makes me laugh with Adyen because I don't know if you saw the financial results in August, but they were not very good. Obviously, when you price at this sort of valuation and then you go, oh, actually, this is what we're going to grow at now. Obviously, it deserved the drop, and it has made me laugh that the recent rally has been because, honestly, we're going to do really well in the future. Trust us. That's what they've said basically to get the 62% rally off lows. I mean, I think probably it went to such a low valuation that people went, yeah, I've always wanted to own Adyen and I'm liking it on this drop, so I'm going to buy it here. But it made me laugh that that's what they did to get the share price up, and it worked. Maybe PayPal should come out and say, trust us, we'll do really well in the future, and maybe that stock will go up 60%. But yeah, anyway, going off topic there. So Adyen, I think obviously we've seen another fintech platform get killed there. I mean, SoFi out of all of these stocks is probably the best performing fintech platform. These guys have had a really, really good year, and realistically, you could argue that, this one's actually up year to date, and you could say but I mean it's still been very volatile. You look at the share price, look at the volatility in there. And when you consider, unlike the other ones, this is a stock that used to be $25, and realistically from them sort of highs, it's still down a fair chunk really. So I guess that's kind of a little bit of difference there. But there seems to be another, in the background, opportunity being created. I think fintech has been the clear opportunity in 2023, but I think we're starting to see a new opportunity here, which is on the UK market. And it's a lot of the UK gaming companies. We know a lot of these UK gaming companies actually do like to get bought out by some of the big US giants out there. But there seems to be an opportunity in the UK gaming market. It seems like the games that they're bringing out, no one's buying it at the moment. Whatever, probably worth more research, or if anyone has more detail on what it will be. I don't know if it's a cost of living crisis, but people aren't buying the new games from them. And we've seen Team 17 now down at 13 times earnings, and a pretty attractive company, decent balance sheet. They have got the issue that there's an insider ownership change going on, but it's got a good track record of profit growth, revenue growth, good amounts of profit. And you look at from the likes of levels of 2021, and this is down 78%. And even in the last couple of days, it started to put a little bit of a rally in through the dip that had in October that boom brought out another update, and then down nearly 45%, and it's like, is that a bit of an opportunity to be looking at? And I think I've definitely got to have a look at Team 17 at some point. And then obviously Frontier Developments, another UK game developer the other day, actually on Monday, same again. They came out and said, we're seeing a lot of weakness in our games, and that's fallen down massively at the moment. The only difference between this one and Team 17 is that Team 17 has a much better track record of delivering profitability, which is the big difference. But clearly seems like that could be the next kind of potential opportunity to be really looking at. And moving on to the next one, which is Shopify. Really interesting one. Obviously, a really good day for Shopify. It's been on a really good run recently. In the last month, it's up 57%. Been on a really big rally. Shopify has. Black Friday, really good Black Friday. You can see here they did a post saying that they saw a drive of 22% increase in sales over last year. Last year was a good year, but this year as well, 22%, absolutely mega is that. So Really impressive there. And Shopify, I mean, Shopify has always been a rich valuation, and I've always wanted to look at Shopify, and I think, for me, this is one of the most sticky platforms that I've seen. It's a very low fee for the sellers that use it, and the benefits they get are unmatched. So it's one of those where it looks like a platform that will be around for many years, that people will not move from, that use the platform. And obviously they're doing really well from extending the products, sales that they're increasing, that they'll always get. And I look at Shopify and I think, this is realistically it's a bit of a rich valuation, but I can't see Shopify all failing in the next 5-10 years. And it's one of those that you don't mind paying the premium for when you look at how good of a company it is. And I was trying to think the other day, and I'll leave this for you guys in the comment section, is there any sort of companies like Shopify where you go, the product is so good, the moat is so good that you can justify paying a mega premium for? And I was trying to think of those sort of companies. What is there any sort of companies where it's such a good company, such a good sticky platform that you can, and it will, e-commerce is very safe for the next 5-10 years. So I think Shopify is very safe for the next 5-10 years. Is there any sort of platforms like that you think are untouchable? I thought I'll leave that for you guys to think of. I was trying to think of any that you just can't see struggling in the next few years that you could justify paying the premium for. Like, if you could lock something away for 10 years and pay that premium for it and not worry about it, what stocks would they be? Or any growth stocks as well that particularly could be. I was trying to think of them, and it was really, really hard. I think Amazon maybe is one of them they potentially could say. But yeah, thought I'd leave that one with you guys. Supreme, so one of my UK stocks, had brought out some earnings today. Stock is up 13%. I could argue this stock could be up a little bit more than this today. Mega earnings from these guys. I think we should have probably broken 52-week highs from it. 12 times earnings, 2% dividend yield on it, and obviously when you look at the results, insane. Revenue growth of 63% year over year. I mean, 63% year over year from a company that is 12 times earnings. In the words of Matty on the Discord, is this the video we're looking at? So yeah, insane. Like, the company that is trading them low shouldn't be doing this sort of growth. Obviously, driven by very good contract wins from like Elf. And you can see here, which generated 26.4 million in the period. Apart from that, the organic growth was very good. When you look at the diverse income as well, they've got the lighting, which was up 21%, vaping up 17%, sports nutrition and wellness up 17% as well, all doing very well. Adjusted EBITDA up 88%, a pre-tax profit up 179%. And you can see here they also hiked up the dividend as well, which is really good. And if you want a few more numbers here as well, you can see. So, I mean, really strong numbers from it. And you look at these numbers and you're thinking, 12 times earnings and collecting a lovely dividend, how cheap can it be? And the crazy thing is that when you start taking out the things they put in to support the Elf Bar contract win, this company is going to be, obviously the growth should be very good going forward, and the profitability is really going to ramp up. I mean, in 2024, I mean, we're basically at the end of financials years now, getting towards March time 2024. If we start looking a year-ish ahead towards the next financial year, 17 million in profitability. I mean, what are we, 6-7 times? Is that 7 times-ish times earnings? 7 times earnings for a company that's growing at these sort of rates. Really diverse company. I mean, obviously there's going to be a little bit of a worry around the vaping issue, and maybe that's why the stock isn't as up as much today, as people are still worried around the vaping issue, and that if more regulation comes in around vaping, then that might affect Supreme. And I agree, but at the end of the day, you just stick a lower multiple on it. Realistically, if we start saying this company should trade around 15 times earnings, and within a year's time we're going to be around 7. Isn't that a little bit too low for this company? So yeah, I mean, obviously, it kind of goes to my point though that I was just saying, is that I would like to own more Supreme. The only thing that puts me off owning more Supreme is the risk around vaping. So I mean, I own a good position, but if Supreme didn't have that kind of risk around it, I would probably make Supreme a top 3 largest UK position because of the vaping risk and regulation. I don't know if I can go that high, which kind of goes to the point of why maybe the share price is a little bit more. I mean, obviously it's up great today, but maybe it could have been higher if it wasn't for that vaping issue. But yeah, I mean, even if you take the vaping issue into consideration, and the regulation point of view is that they would still do very well. And the thing is that it's a diverse company. You know, you look at all the other categories like we've seen, and we're talking about the health and wellness. We're talking about the lighting, and they're still growing very well. So even if I start baking in worst case scenario about more regulation on the UK vaping market, it still should do okay. So I think this is, you know, a good move today. But I look at it and I do keep weighing up, like, should I maybe buy some more? And the only thing is that I like say it puts the vaping element and risk into it, but even when you start pricing that in, it's still looking at, you know, a good opportunity out there. And on to the last part of the video today. Anyway, we've got a lot of a lot of US earnings today. It's like a growth stock week on the earnings point of view. There's a lot of ones that I'm interested in. I mean, Pinduoduo. I mean, that probably be reported by the time you guys actually see this video. CrowdStrike, Workday is quite an interesting one. Intuit's a fantastic company. Foot Locker, so I mean that's probably going to crash JD Sports for me once again, but it is what it is. I'll just buy some more shares, whatever happens. You know, you look at Dollar Tree, Farfetch, Snowflake, that's a popular one. Salesforce, Synopsys, I actually quite had a little bit of a look at that one the other day. So I might check those earnings out. I'd love to get another growth stock in the portfolio. I've not bought a growth stock for a while. So I keep looking at some opportunities. Can't find the one at the right sort of valuation. And that's kind of why I just said to you guys, so is there any stocks that are growth stocks that you won't mind paying the rich valuation up for, considering how strong the moat is? I'm trying to look for one at the moment, but not found the right one yet. But I'll check some of those earnings out. You know, you got Kroger that's going to be reporting, Build-A-Bear. I mean, Ulta Beauty, I've got to check that one out sometime soon, because the fall that one's been on is insane, and realistically it's still going to be it should be around, you know, around the next 10 years, and still, you know, have a good 10 years as well, saying that. So probably needs to be checking that one out. So yeah, I mean, so still some, you know, you start thinking you're getting towards the back end of the year and it's going to be a bit of a quieter week, and then you start looking at some of these earnings here and you go, there's a few that I need to check out, because there's a few that are on the watch list if they ever get to the right valuation anyway. So yeah, anyway, we talked about a lot of stocks there, and I'll cut it there, guys. So I hope you enjoyed the video anyway, and I'll see you in a bit.